Welcome back for another top-notch video. This week, guys, we're going to be looking at the week of the 14th through the 18th of January, and what a start of the year it's been. It's been great. What we want to go over is just some of basically what we do on this channel is we just go over the TSP funds, so the C, S, I, and F fund, or if you're in Roth IRA, those funds track IVV, ETF, EFA, VXF, and AGG. So if you have a brokerage account or a TSP account, we follow some of the major indices. This is pretty much the S&P 500, small caps, international markets, and bonds. So let's get kind of right into it with our charts. So we kind of do a general overview to start. We start with our friends with the Thrift Savings Plan, or the TSP Talk, and this is kind of what we did for the week. So as you can see, had a really good week, almost 3% gain between C and S fund, and then the I fund was 1% gain. F fund was down just a little bit. G fund was up, and then our life cycle funds. So that's what you can see for the week. And then as far as what we have for our markets, we go into just kind of a general overview. Tom does these comments on TSP Talk. He does a very good thing with that. He just kind of does some very general overview stuff. Like I said, I just want to give you just kind of a general over picture of the S&P 500 or the C fund. As you can see, the biggest thing we're looking at here is the 50-day moving average, and they have some things in here in regards to how it popped above the 50-day moving average a number of times and then came back below that just a couple of times. So we saw that here in November and December. Will we see that here? Yet to be determined, but we might possibly see that. We might see resistance come in a little bit higher. But we'll look at the charts a little later on to kind of give you a better picture of what we think. But this is a pretty good indication that we might see things, maybe with this giant ladder, that the rally is starting to get a little tired after such big gains since the beginning of the year. With the small caps or the S fund, VXF, we saw it rise just a little bit. We are popping its head above this trend line here, and we're starting to see the indices start to pick back up again. This is our 200-day moving average. Could really start to see some resistance in here with all the big moves that we had. This fund has been pretty incredible since 2019, so it's been doing very, very well. The basically AGG has rallied since basically the beginning of November, and we're starting to see kind of a downtick with that. With stocks starting to pick up so much, we're starting to see investors switch over from bonds to stocks again, so we're starting to see that decline just a little bit. We'll go into charts when we look at that. So moving more into the more in-depth analysis of each of our funds. This is IVV or the C fund. With the C fund, as you can see, we did make it through that 50-day moving average. We're starting to get very cautious with this. I think we could start to see resistance somewhere in here from the 270 line to the 277 line. Just because we have the 200-day moving average, we have resistant lines, and we have the 50-day moving average kind of pulling that back down. So just be aware of that. Also, charts can't go up forever, as they just can't go down forever either. So just keep that in mind. Moving forward, if we pull over our C fund chart and take a look at that, as you can see from the weekly perspective, we are almost coming back to positive. We have not been positive on this chart since. We've been declining from our top since the beginning of August, but we basically made it out, and we've been negative for since October, and it would be really nice to see us pop positive again. On our 2-day chart, which is a little bit faster chart, as you can see, we are in the positive, moving up very healthily, no issues or problems there. And even on the 4-hour chart, we're doing very well. We just had a fake out. We had 2 fake outs in here, and usually when you have a fake out, you have a big increase in funds. And as you can see, fake out 1, we had a big increase in funds, and then fake out 2, we also had another big increase in funds. This second one, though, something to keep in mind is we're getting close to the top of these Bollinger Bands, and as we like to mention with price, when it starts to pop its head above here, it's like almost like it doesn't have air and it has to sneak back into the Bollinger Bands. So just keep that in mind as we're moving forward. But as of right now, we have our blue line above our red line on our smallest moving chart. Things look very, very good for that C fund. Moving on to the S fund or VXF, small caps, we had the same thing. What an incredible rally this has been if you've been a part of it. If you were stuck in this fund, you've pretty much gained back everything that you lost in December, you pretty much gained back. Almost, just about. We're just a little bit farther down, but that whole month basically just about gained back. So overall, when we move into our charts for VXF, as you can see on our largest chart, we're doing very, very well. We almost have a cross here of our blue and red line, and that's a very good sign to get into this fund. On our 2-day charts, we have no issues here. Rising price, the DO oscillator is still moving up, which is really, really good. And even on our 4-hour chart, we had 2 fake outs, kind of we saw with the S&P 500, and it is continuing to rise. So these small caps are doing very, very well, and we still have a blue line above a red line. So no issues here, getting very close to the top here. And we'll just have to see where things go at this point. I cannot believe that funds have gained almost, this fund has gained, what was it, close to 9% for the month, and it hasn't even been a full month yet, almost 10%. Keep in mind, guys, that stocks usually do about 8% a year, so it might be worth it to think about taking some of that profit sharing, not getting greedy, and sitting on that before we have the next downturn. Usually when there's a lot of up and down, a lot of volatility, we can see a lot more volatility. So just keep that in mind. You might want to capture some of the gains that you have gotten out of this rally. But we'll continue on. The last stock fund we have is EFA, or International Markets. This is the I fund. I fund has been in a bear market for a very, very long time. Just been really struggling with the moving averages. We moved below the moving averages around June and continued to kind of see how we can just hold this moving average back every time it tried to get above it. And we are trying to get above it here. Could this possibly be a bottom for this fund? Could we see it go up? That is a possibility when we look at our charts for EFA. As you can see on a weekly chart, we did end up crossing here. We haven't seen that in a while. We had a cross here, but it wasn't a very good cross in September, and it was kind of a fake out. And as you can see, guys, the last time we really had a good cross for EFA was almost a year ago. It's been a very, very long time that we've had a very good rally with EFA, and with it being so beaten down and so far away from its Bollinger Bands here, I think this might be a very good time to get into EFA or be a part of EFA for a very nice rally for international markets. On a 2-day chart, we look just great. Things are going very well. And on a 4-hour chart, we are blue above red line, and we are doing very well. So for all 3 stock funds, I think it's decent to have your money there. If you've been in for this month of January, it's been a very, very good run for you. And last of all, let's look at bonds a little more closely. With bonds, AGG or the F fund, bonds had a wonderful run in November. Unfortunately, the channel was taking a break for 4th quarter, so we were not a part of 4th quarter, which was very unfortunate. But we would have maybe saw this and maybe got involved a little bit in this instead of running down the December charts. Anyways, with AGG, when you look at it on a weekly chart, we are coming down off of this just a little bit. So we're seeing a little bit of a decline since we saw stocks pick up so much. On a 2-day chart, as you can see, we're seeing the blue line cross the red line. Not a good time to get into AGG right now. We missed that rally if you were not a part of that rally, so I would stay out of that fund for the most part. And overall, guys, that is our funds for the week. If you guys have questions, concerns, or comments, go ahead and write those in the comments below. As always, we really appreciate your guys' support. Please like, subscribe, or share the channel, and we'll see you guys next time. That's another top-notch video.